Hello to all our viewers. Welcome back to Investing in Gold for a New Generation. My name is Rafael. This is Steve with me. And the topic of today is, what does the 2020 US presidential election mean for gold? So currently we have Donald Trump as the current president of the US and is under the Republican Party against Joe Biden, who is running for the Democrat Party. And as of now, October 27, 2020, Biden is in the lead in the polls. So the first topic of the day, Steve, is the gold bull market significantly dependent on the outcome of the election in terms of short-term and long-term periods? What do you think?
Yeah, so this is a fantastic question, and I'm going to say that it is very important to some extent, and I think rule number one when you're dealing with politics and investing is put that politics, put your hopes to the side, and focus on the reality. So whether you're a Trump fan or you're not a Trump fan, we got to focus from an investment perspective on reality. And so I think the decision between Trump and Biden has definitely some impact, and maybe some significant impact in the short term on gold. But in the long term, I think it's probably a relatively minor impact. But short term, I think we could see some pretty extraordinary volatility, just as we saw back in the 2016 election. So yeah, definitely short term, I think it could have huge implications, but not so much long term. And the reason for that, and we've talked about on the podcast in the past, is, what we've seen is this very long bear market in gold and this extremely long bear market in gold mining stocks. And so what's happened is supply is shrunk. There's much less exploration. And so when you have that supply kind of dropping down or not increasing very rapidly, any sort of extra demand can really push the price of gold up a lot. And I think that's the tectonic plates that we've talked about on this podcast that are at play here and are going to drive very likely a long-term and at least medium-term and significant gold bull market. But we definitely have some short-term cross currents that we got to look at.
Gotcha. Just to elaborate a little more, were you specific about the different volatility we'll see depending on the person who's elected, or do you think it'll be similar?
That's really good, and that's what we want to get into here. I think if it's definitely, I think whoever gets elected could definitely have very different impacts on the short-term volatility. There's also this cross current of, in the U.S., the president isn't, only has so much ability to drive policy and so forth. There's still the Congress and the Senate and the House of Representatives. And that's another variable here that if, say, they all go Democrat, that could be pretty spectacular for gold in the short term. If they don't all go Democrat or they go all Republican, I think that could be maybe a bigger negative for gold, but even then, there's additional cross currents, I think, at play. If you want to get into those right now.
Sure.
Yeah. So okay. So I'm going to throw out a couple scenarios that we could see. So I think let's start with Democrats. Biden wins, and they win all the Senate and the Congress. So what that's going to drive, there's almost no doubt from the Democratic perspective, they want to have very aggressive stimulus. They've been talking about it. I think they are going to push the limits of economic stimulus. I definitely, I could see them doing that. And if they have the control to do that, they are going to go really, really aggressive. I could see, something like double-digit trillions of stimulus next year. Throw in a vaccine coming, early next year, and that could really drive inflation and really like a huge shock to the system, create a lot of inflation, and create some strong demand for protection through gold. Now, if it's not a full Democratic sweep, if it's something like, Biden wins, but the Republicans win the House or win the Senate, I think it's less likely they're going to win the House, but definitely could win the Senate. That's going to put huge restrictions on what Biden can do stimulus-wise, and we're seeing that in the news already. That's an issue. I think if Trump wins and they dominate, they win everything, we're going to see stimulus. There's no question about that. But I don't think we're going to see as much. So that might put a damper on what happens next year as far as inflation. But I think there's, I think if it's all Democrats or all Republican, we're going to see big stimulus. But if it's not, we're going to see a lot lower stimulus. And I think, if you had to go between Democrats and Republicans, we're going to see less with Republicans than the Democrats. So I think that's how that could play out. And the more stimulus, the more chance there's inflation, more chance for people saying, hey, I want to protect myself and invest in something like gold. But here's an extra twist that I think a lot of people are not recognizing. If you could listen to other podcasts on gold, other investment podcasts, this is not coming up. And I think it's really critical. If the Democrats win, one of their policy initiatives is raising the capital gains tax. And if they do that, so that means if you make a capital gain and you crystallize it, you take it into your income, then you have to pay a capital gains tax on that. If they raise that capital gains tax, and I can't remember the exact numbers, but it might be something from the range of, say, in the low 20s to the high 30s, you could see a lot of people decide to say, you know what, Democrats have won. I think the tax rates on capital gains are going to go up. I'm going to sell a lot of my assets now, a lot of my stocks, whatever, and crystallize those capital gains. And that could be a huge short-term selling pressure. And think of it this way: if they're worried, about capital gain taxes going up in 2021, in the last couple months of 2020, we could see a big sell-off. I think there's, again, it's a function of the Democrats, I think, winning everything. But if that happens, I think people have to be ready for a massive sell-off. Maybe as big as what we saw in March. That's what I think. Now, it would be short term, but I think that's what people are missing. No guarantees that happens, but I think that's really something to keep in mind here. Beyond just the stimulus and the probability of that, it's if there is some concern about people wanting to sell off assets before the end of the year to avoid that higher capital gain tax.
You're saying that because it has an effect on gold in a way where this could create an opportunity for people to buy?
Yeah, so exactly. And, whether it directly impacts gold or whether it's just, what we saw, like what we saw in March, where there's such a violent sell-off that it just takes everything with it because people are forced to sell, forced to get out. And when you have, even a modest amount of attempted selling in a short period of time, the market can fall pretty rapidly. So I think that's something definitely that could impact gold and also gold mining stocks. I think, again, there's no guarantees, but I'm thinking people are underestimating the chance that could have a dramatic impact. And that's more a function if the Democrats win everything.
So what do you think investors are doing right now? If they believe that there could be a sell-off, in the short term, let's say they want to take a couple of steps ahead of time before it happens, what do you think investors are doing now? Perhaps they're selling at the moment before they see a huge sell-off. Imagine they're close to the peak and they don't want to wait till the last minute before the sell-off. Then they're trying to sell while everyone else is selling. Perhaps they're selling right now. Because the markets, like the S&P 500, has been volatile, very volatile over the last month. And I keep hearing from different podcasts that happens every election year and in October specifically. Do you think that's happening right now?
Yeah, I think there's probably a little bit of selling and positioning where people are saying, hey, there's some pretty big unknowns here. And
I
we
know.
saw it in 2016 where, there was some big surprises. Very few people thought Trump would win, and there was enormous volatility in the day after the election and then the weeks that followed, both for stocks and for gold. So I think a lot of people are saying, hey, let's just be a little bit careful. And when we say people, often it's more speculators, right? The speculators are the ones that kind of create most of that up and down short-term volatility. I think a lot of speculators are stepping back saying it's not worth it to make a huge bet either way, and I'm going to kind of sit back a little bit. So I think that's kind of seen at least some people sell off some positions. I mean, it also affects people who are short and they're trying to close out their short positions. But I think there's definitely some people saying, let's step back a little bit. What I would, if someone came to me and said, what should I do? I'm wanting to invest in gold. I would say, it's good definitely to have an investment in gold going into the election. But I wouldn't necessarily say, oh, go huge into gold and try and predict that the Democrats are going to win and gold's going to go up a lot and it won't come down after that. I would say have some and then sit back, and if we get some spikes down, buy some more. But just keep being patient. Like we talked in the other podcast, every month or a few months, buy a little more, and then on the big spikes down, be more aggressive. So I think that's the right strategy for most people that are looking to just have a basic 10%, 15% in gold related investments.
Just as a little bit of a recap of what we've discussed today, you said that if either party wins the whole thing, gets a sweep, then we're going to see a lot of stimulus. Is that correct? Is that
I think that's my judgment
yeah.
right now, because I think when you see that one party has the presidency and one party controls parts of the Congress, there's always kind of a positioning of themselves as who's doing the right thing, who's doing the wrong thing. But I think if they all have power, then they feel that they can kind of position it that they're doing the right thing and they're going to go. And it's always, governments are always going to lean towards more stimulus than less. And I just think the Democrats would probably do even more. But again, I think it's dependent on if one party wins everything, then I think we can pretty much count on some large stimulus in the next year.
And
Sure.
then the Democrats would also potentially impose the high capital gains tax.
Exactly. Yeah.
Okay. So I guess if one party sweeps it all, we could see a potentially better gold bull market for this generation.
Well, and so I think the way I would put it is short term. That's definitely the case. I think again, there's that caveat, big caveat, if the Democrats win everything. But I think that's say let's say over the next year, we could see some really aggressive stimulus, and that would, I think, be a net positive for gold. But I think longer term, it's still, these tectonic plates that supplies, shrinking, and any sort of increase in demand is going to push the price up a lot. And we're going to see that, I think, build over many years before supply can start to react to that. So I think that is still at play. And even if we didn't have an election next week, we should still be, I think, taking advantage of that and benefiting from that kind of diversification. But short term, I think there could be some pretty big moves in gold just from the outcome of the election. If it's all Republicans or all Democrats.
Steve, in the last podcast, we kind of said that we might touch on gold versus gold mining stocks during our next episode. Do you want to talk a little bit about that?
Yeah, so I think, we'll still cover that issue a little
It's a
more
big
in depth.
subject.
Yeah,
So just
but
a general idea.
yeah, So one thing that's interesting, and you do see this from time to time. We saw it in 2008, where gold maybe goes up or goes down somewhat, but gold stocks go down a lot. And I think there is that potential that if you had some sort of big market sell-off, because people are concerned about rising capital gains taxes, I think you could see maybe gold say, let's go down 5% or 10% as an example, but gold stocks go down like 30 or 40%, just because people are selling off mutual funds and ETFs, and they all maybe own a bit of gold mining stocks, and they drop with that. So I think that's definitely a risk here. But as we've talked a lot in the previous podcast about taking advantage of volatility, you want to say, hey, these are the things that could happen. If they happen, I'm not going to get freaked out and sell everything. I'm going to take full advantage of it. And it was the same thing back in March. Okay, something like this could happen. Be ready to take advantage of it, particularly for gold, because I think you might only have like a week or a few days where you can take full advantage of that. So it's just being mentally ready for that scenario, and it could be a great opportunity to get in gold mining stocks if it plays out that way.
Just something I want to touch about is just analyzing the last bull market from 2001 to about 2010. I saw that, after every dip, not too long after, we would see another, positive slope. But since our last peak, mid-August, we haven't reached anywhere close, and by anywhere I mean within $100 worth of the gold price. Again, we're kind of hovering at that $1,900. So I was just thinking, as a gold investor myself, is this something that I need to worry about or think about too much or not? And from my personal experience, I found that, first of all, presidential election, 1 month, this is the 1 month before the presidential election. And gold is kind of that kind of asset class that balances other asset classes that people might think is risky at the moment. And I was thinking, you know what? I think it's okay that it's not shooting up again, or it's hovering around the same price for a certain period of time. And it's not really going too low, it's not going too high, but we do see volatility because of the current events. What do you think?
Yeah, exactly. Like I think it's a very unique event, this election, right? It's quite a battle between two different views of the world and two different ways of managing things. And so I think it's a big event, and there's always, I think it's really just saying, okay, it's likely going to cause some volatility. And I don't think, again, I don't think people should be alarmed by that volatility. Again, you referenced 2001 to 2011, and we've looked at that, and a 10% drop once or twice a year is extremely normal, and you want to take advantage of those. Occasionally, we get 20%, 25% drops. I think that's possible here, and that you want to be in a position to take advantage of it. But nothing's happened. We had kind of a big spike up in July, early August, and the gold there was not get too excited by that and rush in as it's at its peak. And it's kind of come back, it's stabilized. This is pretty much normal behavior for a global market. And it would still be normal if we dropped another 10% from here, and just be ready for it if it happens.
Okay, sounds good. So we have a question from one of our listeners, and basically what he's asking is, in our first podcast, you were in support of mutual funds over ETFs. And from his research, he finds that in general terms, mutual funds can't create a positive alpha after fees. And what he wanted is for you to discuss a little bit more about um, kind of taking the side of mutual funds over ETFs. Now, he was kind of general. Maybe you can also tie it into gold and gold mining stocks,
Yeah, this is
ETFs.
fantastic that we have our first question from a viewer. And and this is an excellent question because, for anyone that's kind of in the investment world, there's been this big debate between ETFs and mutual funds. And mutual funds have been around a lot longer. ETFs are fairly, newer, last, say, 30 years, 25 years. Mutual funds generally charge a higher fee. Maybe it's 2%, 1%, 2%, 2.5%, whereas ETFs maybe charge 0.2% or 0.5%. So much lower fees that they charge for managing the assets. And that's a huge advantage for ETFs. Just by lowering the fees they charge, all other things being equal, ETFs are going to do better than mutual funds. And yeah, the idea is, well, mutual funds, they have a little more ability to adjust to different market conditions and so forth. Maybe they can kind of come back. But generally, it's not enough to overcome that huge fee difference. So it's a great point by our viewer. And yeah, so generally, people have shifted more to ETFs. Why I get a little concerned about that with gold and gold mining stocks is it's a much smaller market. And one issue that can plague ETFs is when there's a huge rush to cash out. So what happens is the ETF doesn't sit there with 5% of their money in cash. They invest all their money. So as soon as someone comes in to sell something, they've got to sell their investments. They don't have this buffer. And it's remarkable how important that buffer can be to managing liquidity. Whereas a mutual fund, usually they sit on a little bit of cash and they can handle that. They can also, a mutual fund can decide, hey, we have a huge demand for people to cash out of this mutual fund. Well, they can say, well, what's the most liquid assets? What do we want to sell? And they can make that decision. Whereas an ETF, that order to sell comes in, they just sell a bit of everything. And because you've got this gold market and particularly gold mining stocks, where it's a small market, there can be stocks that are very illiquid, hard to sell. And if you want to sell them, the price drops a lot. That I feel like gold mining stock mutual funds have a material advantage over ETFs when it comes to those kinds of large selling events. And we saw that in March. In March, there was an ETF, gold mining ETF, junior gold mining stocks called GDXJ. And I remember, I want to say March 13th. I remember the day correctly, March 12th, maybe. I remember sitting in the Bloomberg lab at the university and watching this ETF fall like 30%, something like that in a few hours. And it was so much demand to sell. It was dropping dramatically. And if you owned that ETF, there's a risk that you get freaked out and you sell because it's dropping so rapidly. Or maybe you do decide you want to sell for other reasons. And now it's, you're forcing even more selling and you're having to sell. Like, I think at one point the ETF, and this is a little more jargon that people might understand, but that ETF was trading at 25% below its net asset value. So there was such forced selling by one or two or three large players that the price was just dropping dramatically. So that's where I get a little bit worried about gold mining ETFs. So for the average investor, I say stick to that gold mutual fund for this sector. For other investors that are more sophisticated and kind of understand those dynamics, ETFs are still fine. And some ETFs are unique that, yeah, maybe have a little bit invested in those ETFs. But average investor, I feel like gold mining stock mutual funds have a meaningful advantage over ETFs. And I think if we look out 5-10 years from now, those little differences between ETFs and mutual funds won't really matter that much. And you're just going to be a higher probability that you're going to get a, you know, a significant potential return on gold mining stocks in that next 5 to 10 years if you just stick with mutual funds. So that's my view on it, but it's a fantastic question from our viewer. We'll have to maybe give a prize or send send our podcast T-shirts or something. We'll have to come up with a prize for a best viewer question. But I can guarantee that is our best viewer question so far on our podcast.
That's right, because it's our only one.
Yeah.
But we
Yeah.
do encourage more questions. So please, if anybody is interested in asking anything, we'll say it on the podcast so that everyone else can get the answer and the information for those questions. And we really appreciate that, as well as any feedback that you guys have about our show, of how we can improve, or what kind of subjects you'd like to hear. So I guess that's our podcast for today. Steve, is there anything you want to add?
I think I'm looking forward to the excitement I think that's going to come out of this election, just from an investment perspective. I think and I'm just eager to kind of see how this all plays out over the next couple of weeks.
Awesome. Me too. So therefore, we will have another podcast following after the election, pretty close after the election, maybe within the week, kind of talking about the outcome and what we've seen, within the week after the election in terms of gold, the rest of the market, and taking that new information and maybe discussing what could happen over the next short period of time. Awesome. Thank you very much, Steve.